Question number 2 of the June 2025 exam paper in the subject Basic Finance required students to do two things. A, students were required to prepare a statement of profit or loss for 10 marks. And B, students were required to prepare a statement of financial position for 10 marks. In this video, I'm going to show you how a student ought to have attempted both those questions. A, to prepare the statement of profit or loss, and B, to prepare the statement of financial position. If you don't have a question, no problem. I have put it in the description below for you to be able to follow through. And so, let's get started. The first thing that you always do is you always need to indicate the name of the account. Okay, and in this particular case, we are told that these accounts are for Chimuka. So we'll write Chimuka right over there. Chimuka, these are his or her accounts. And what are we preparing? We are going to start with a statement. Okay, we're going to start with a statement of profits. Okay, statement of profit or loss for the year ended. For the year ended December 2024. So this information is always given, and make sure you state it. So you don't need to worry. This information is always given right over there like that. Okay, so we start with sales. We start with sales, and we've been told that the sales value is 185,400. The sales value is 185,400. Great. Ask yourself, is there any other information given relating to sales? The answer in this particular case is yes. Why? Because we've been told that there is sales returns. Sales returns simply means that out of the stuff that we sold, the products that we sold as a business, some of it has been returned. So if it has been returned, it means that our value is no longer 185,400. The value for the sales returns, we've been told, it's 3600. 3600. 3600. All right? This is the value of how much has been returned. 3600. Okay. Now, what we're going to do, okay, before I continue, let me just move this to make it look neat. Always make sure your work is neat. We will subtract the sales returns from the sales. We will subtract the sales returns from the sales. And what does it give us? Okay, whatever it's going to give us, we're going to put it right over here. Since I'm using Excel, I'm simply going to apply a formula. On the exam, you are allowed to use a calculator, and so you can move with that. So the sales value at this point, when we subtract the sales returns, this amount, from the sales, it gives us this amount. So this is the starting point. We proceed, and now what are we going to do? We are going to take into consideration cost of goods. Okay, cost of goods. And when talking about the cost of goods, we are going to talk about purchases. How much is given for purchases? We've been told that for purchases, the value, okay, we've been told that for purchases, the value is 50900. This is the value for purchases. Good. Is there any other information given relating to purchases? Yes, we've been told that there are purchase returns, meaning we are the ones that purchased. Chimuka is the one that purchased, but then some of the things that he bought may not have been to his liking, and he takes them back. So you have to less purchase returns. Okay, you less purchase returns. Purchase returns. Okay, let me just move this to make it neat. And what is the value for purchase returns? We've been told that the value for purchase returns is 6700. 6700. Good. We move on and take note of what? We take note of our opening stock. Okay? Opening stock. And we've been told that the opening stock is worth how much? The opening stock or the inventory at the first of the month is 11400. Always take note of the date. Always take note of the date. If the inventory given, the date given for inventory is the first of the month, that means that that is the opening stock. If it is at the end of the month, it means that it is the closing stock. And we've been given what the closing stock is. So less closing stock. And how much is the closing stock? We've been told that the closing stock was 24400. 24400. So these are what we consider at this particular point. These are what we consider. What do? We add all these together. We add all these together. Okay? And what does it give us? We'll put the sum right over here. Okay? We'll put the sum right over here of these. We add these. What does it give us? It gives us 31,200. 31,200. This 31,200 is going to be subtracted from this 181,800. This, the cost of goods, okay, is subtracted from sales. And the value for the cost of goods is this amount. And this amount, we're going to subtract it from sales. Okay, we're going to indicate our answer right over here. We are going to indicate our answer right over here. Okay, so what are we doing? It's this one minus this one. It gives us 150,600. 150,600. What do we call this amount? This is what we call the gross profit. This is what we call the gross profit. So we are done with the first part. Okay, we are done with the first part. Gross profit, just move it right over here so that it is aligned to that amount. Okay, gross profit. We proceed and talk about expenses. We proceed and deal with expenses. Okay, and expenses are the amounts of money that are spent in running the business. And we've been told we just need to look at our trial balance. We just need to look at our trial balance and extract expenses. And so the first one on the list is lighting. Lighting and heating. Lighting and heating. And what's the value for lighting and heating? We'll put it right over here. The value for lighting and heating is 8250. Okay? Then we've been told the next on the list is SundRY expenses. SundRY expenses. Okay, and the value for SundRY expenses is how much? The value for SundRY expenses is 4200. The next, we've been told that there is general expenses. General expenses. It is good practice to follow them through one step at a time in the list in which they're given. So general expenses, it's 3400. Next, there is wages and salaries. Wages and salaries. Okay, wages and salaries. How much for wages and salaries? We are told that for wages and salaries, it is 45350. 45350. The next expense that's there on the list is none. These are the expenses that are there on the trial balance. These are the expenses that are there on the trial balance. Okay, let's continue. This is not the end itself. Always move one step at a time. If you are not clear, continue. You will be able to figure it out as you go where you possibly may have made a mistake. So these are the expenses that we can extract from the trial balance. These are the expenses that can be extracted from the trial balance. Good. We have, however, been given additional information. We have been given additional information. And there are 4 pieces of additional information given. The first one relates to inventory, and we've already taken that into consideration, which is here. The second one is that lighting and heating prepaid at 31st December 2024 were 2,600. Prepayment, when there is a prepayment, for example, it could be with rent, it means that you have paid way ahead against your schedule. If you pay on a monthly basis and you pay 3 months ahead, that is a prepayment. The secret behind prepayments is always subtract prepayments. Always subtract prepayments. In this particular case, we've been told that there is prepayment of what? Lighting and heating. Prepayment of lighting and heating. So you could write lighting, okay? You could write lighting and heating, all right? And you could clearly indicate that this is prepayment. Okay, you can just simply say prepaid. Lighting and heating, prepaid. Let me just move this so that it is orderly. Lighting, heating, prepaid. Always subtract your prepayments. In this case, it is 2600. Then we move on to another piece of information given. And this piece of information is that wages and salaries accrued. Wages and salaries accrued. To accrue simply means to add on, to compound. So if, for example, you owe someone 5,000 kwacha last month, you owed them 5,000 kwacha last month, you did not pay. This month, 5,000 kwacha, you do not pay. It means that you have accrued a debt of 10,000 kwacha. So in this case, it is wages. Okay, wages and salaries accrued. Okay, wages and salaries accrued. So here's the secret. Every time you're dealing with accruals, add them. Every time you're dealing with accruals, add them. In this case, we've been told that the accrued amount is 14800. 14800. Is that it? No. This is not it. Why? Because there is depreciation. There is depreciation. We are told that the motor vehicle depreciated at 20%. The motor vehicle depreciated at 20%. So we are going to write depreciation, motor vehicle. Okay, depreciation, motor vehicle. 20%. 20% of how much? You go back to the trial balance and check. We've been told in the trial balance that the value for the motor vehicle is 157,000. 157,000. And this depreciates at a rate of 20%. It depreciates at a rate of 20%. What is the value for the motor vehicle? The value for the motor vehicle is 157,000. And it depreciates at a rate of 20%. So we multiply this by 0.2, which is 20%. What do we get? 31400. 31400. And this is the amount we are going to write over here. 4,000. So 13400. Good. We have also been told that there is depreciation that applies to office equipment. So we will write again depreciation, but this time the depreciation is for office equipment. If depreciation is for office equipment. Okay, what is the value for office equipment? The value for office equipment, we've been told, is 60,000. And this is depreciating at a rate of 25%. So we are simply going to multiply this by 0.25. 0.25. And it gives us 15,000. And this is the 15,000 we're going to write over here. 15,000. Good. So these here represent the total expenses for the business. This represents the total expenses for the business. So we're going to write total expenses. Okay? Total expenses. And we'll place the amount just right over here. We'll place the amount just right over here. All right? Since I am using Excel, I'm simply going to do this like that. And this is the value that it gives me. It gives me the value of 101,800. 101,800. And so it is this amount from this amount. We'll put that right over here. Okay? It is this amount. Subtract this amount. What does it give us? It gives us 48,800. And this is our net profit. And this is our net profit. So this is the starting point. This is the starting point. This is what a student needed to have done for the first part. But relax. Why? Because there are two parts. There's A and B. And there may be need for changes here depending on what happens in B. So I'll see you in the next video where we'll look at B.